Welcome traders. In this video, we're going to go over today's price action. The only indicator that I use is the 21 EMA. Other than that, I solely rely on trend lines and channels. I start by zooming out and looking for the pre-market lows and highs. As you can see here, this purple line is the pre-market low and up here is the pre-market high. Anything after the open, I'll adjust, but I like to keep these throughout the day and look at the reaction we get. We are also looking at the 2000 tick chart, which is similar to the 1 minute, and we are looking at ES. So we started off by having a nice spike in a channel where we had a break and a new high, and this is where the market opened around this area where we had a bit of a consolidation. So I was just waiting for a price to choose a direction. I also had a small downtrend in play here where we had a break and a new low, so we can mark that. And for anyone who's new here, in the videos that I posted in the beginning of my channel, it just goes through how I draw trend lines and how to look for entries. So this is more of a moderate compared to a beginner's session or lesson. Okay, so we had a downtrend in play. We ended up breaking and making a new low. So now we are just going to rely on the shortened channels. So we can draw a channel like this. And as you can see, we had a break of this channel and we ended up pushing, making a new high. So this is an area where I'm just going to wait. I also zoomed out and I saw pivots of higher lows as well as higher highs. As you can see, each high is higher. So I did see a bit of an imbalance. We call it a bullish imbalance, meaning when I'm trading, I'm looking more for longs opposed to shorts, just because price action is telling me that the buyers are are more in control, but it's not a super strong uptrend where we're pushing higher and higher and we are above the EMA, and it just looks like one clean channel up. So this is an imbalance where the corrections are a bit stronger and longer, but just I like to keep that in back of my mind when I'm looking for trades. So as you can see here, we had an uptrend in play. We ended up getting a break here and we made a new high, so I have to pause looking to take a long since this channel played out. Now, we are at the high of day key level, so we expect prices to push back down, and my target usually would be that low of day level here. And we can do that by looking for a reversal pattern. This is also a failed breakout since most breakouts will fail. So since we have a nice strong push above this key level, once you see a strong rejection, this is an indicator that this breakout is failing. And just by looking at the EMA and seeing a strong push under, we can see we're going to have a resumption of the bears taking over this trend. Now, what I was looking for here was a failed second entry long. We didn't have it, but as you can see, we had a nice downtrend that played, or that's in play, and I was looking for a second entry short to short this since the downtrend is still live and it's still in play, but we did not have a setup. I was looking for a second entry short at the EMA, which is this blue line, but we only had new low, first entry short here. I was waiting for price to come back to this blue EMA and for a second entry short. It never set up, and we ended up pushing stronger above the EMA. Now, what I did during this move is I zoomed out, and once again I looked and I saw, wait, it definitely looks more and more of an imbalance since we didn't test this low, and also we are making higher lows as we go. I was eyeing a wider channel. No, it was from here. I was eyeing a wider channel, but I just wanted to see how price was going to react at this high of day key level. Let's say, for instance, we pushed above it and it turned into a support and we had a continuation, then I definitely would have kept it. But since price did stall once again at this key level, I ended up waiting to see more price action form. We can draw a little bit of a wider uptrend like this. Well, I had it initially like this, but it's just too small of a channel, And whenever you're drawing a channel and one leg overextends the other, it usually means there's a wider tread line. So I ended up just drawing it. Yep, I ended up drawing it like this. I was looking for a long position, and we did have one right here. So counting from this high, we have a new high, first entry long, pull back, and we had a second entry long here. The only reason why I didn't take this trade is because we're right at the key levels. And as you can see, we are rejecting. And if you zoom out, you can see we have one, two, three rejections at this key level. So once I saw that, I just wanted to wait just to get more price action. I really wanted to see price to break over or above this key level, and it turned into a support, and it just had a continuation, but that didn't happen, and we ended up um, reversing. Now, this was a new high here, and according to trendline rules, once we get a break of a new channel or the current channel, and we are at the high of day, which is here. This is another failed breakout. We broke out of it and we failed. So what was I looking for? Well, I was looking for a reversal pattern. So I was looking for a failed second entry long, and we have that right here. Counting from this high, we have a new high, first entry long that failed, pushed under EMA, which indicates a stronger sell side, and we ended up going a little bit higher and pushing back under the EMA. This right here was the failed second entry long, and let me mark that for you guys. Um, the only issue with this candle was that it closed super strong. The momentum and the sellers just really came out of nowhere. Um, and I didn't have any entry. It just kind of closed right at the end and had a continuation with no pullback. Let's say it did pull back. I would have definitely looked for a limit order around this area here, but it just collapsed, went down, and it made a new low. Well, actually, I had it drawn like this, right? I had it drawn like this. We had a little bit of overshoot, which is overselling. I don't use the RSI indicator, I use trend lines. So once I saw the overshoot here, I was just a little bit more careful, because once you have overshoot, you can expect a reversal or a continuation after the correction, but the corrections usually are a bit longer. So I was waiting for this correction to play out. Oops. Right? So we have a little correction here. Now over here, we do have a second entry short. Counting from this low, we have new low, first entry short, pullback, second entry short. And then we had a pullback and we had a lower high confirmation candle. Now I did like this setup very much. And we also have a triple test right here, and I'll make it red. I did like this very much. The only reason why I didn't take it is just because of the overshoot. I did want to see a new high for this mini uptrend, but to be quite honest, after seeing the multiple test here, this definitely would have been a great trade to take. But I remember watching it and it ended up opening, pushing all the way down with no pullback, making about a 3 point move, and then pushing back up. So that's what kind of made me hesitate, and the move already happened because I usually go for 3 to 4 points. But this is definitely a great setup here. It's a lower high confirmation. So even if we do have the overshoot, as long as we have an extra confirmation, it's okay to take. So we had a second entry short. This was the lower high confirmation of it. Along with a triple test, we need a new low for this downtrend. So this would have been a great short. But the way it's set up wasn't really the best. But it's definitely a great setup if it had a little bit more of a pullback. So we had a break. We had a new low here. Now, um, during this session, I was just really playing the shortened channels because there was not really a direction. So I was just looking for reversal patterns or second entries. Over here, we did have a bit of a congestion and a consolidation. So this was an area I just waited out. Usually when you see the EMA in the middle of the bars, this is a good area to just really wait for the congestion to play out and wait for another market cycle. not to play any of this congestion because there's not really any direction and you can really get stopped out either if you go long or short. There's not really any direction of any sort. So I just waited for it to play out, and finally we had a little bit of a breakout, and we have a nice uptrend in play. Now, I had my uptrend drawn like this, but since we never touched the EMA, not even once, and it does look like a seamless leg working higher, I did widen it a little bit. And the reason is because usually when we don't test the EMA, you can expect price to retest that high. So this was a trade that I took, counting from this high. We have a new high, first entry long, pull back, and we have a second entry long here. Now, this trade over here did close, and let me just mark it for you guys. So this trade over here did close a little too high, near that high, right? And you want more room. But the only reason why I did take it is because we did have a nice pullback. So once we broke above, we did pull back. So I managed to get a limit order, and we ended up getting over the 4 point profit target, which I usually go for, and plus more. So this was the trade I took today and the only trade that I took today, which was a long position. We had a new high, first entry long, pullback. We had a nice second entry long here, and it was a clean scalp, right? And then after that, we're just going to draw the shortened channels. I was gonna at first I initially drew it like this, but since the move was a little bit more steep, I did look for a wider alternative like this. Although we don't have many confirmations, I did still like it, but we also do have overshoot here, which is an area that is oversold. So this is an area where you just have to be a little bit more careful, where the reversals or I'm sorry, the corrections are a little bit stronger. So I was just waiting for the correction to play out. But this is where the area or an area where we really weren't respecting this correction, especially during this whole trading session when it came to taking short positions. We really didn't have strong continuations. So once I saw a nice strong push above EMA that retraced above the 60%, you can just grab the Fibonacci. It's super simple. Start it from the highest point to the lowest. Once you see a 60% retracement, you can forget about that channel or trend that you drew previously. So once this downtrend was retraced by 60%, I ended up just counting it as a tight break. How did I draw it earlier? Something like this, break, new low. Doesn't have to be perfect. And I was just focused on the uptrend because during this whole trading session, the uptrend was being respected a lot more. So I was looking for an uptrend like this, right? We did have a little bit more of a steeper correction. So if we draw it like this, pretty simple. You don't have to go crazy and look for a spike. We had a break, new low. Over here, I was looking for a higher low confirmation because we need a new high for this uptrend. We did have it over here. The only issue with this higher low, over here. So the only issue I had with this higher low is that it was very far from the EMA. We barely touched it, and the body's very far from the EMA as well. So when that usually happens, there's usually a second test. So I ended up skipping this, but it ended up working. And the reason why we're taking this higher low alone is because we have an uptrend that needs a new high. The downtrend played out with the break in a new low, right? So we expect prices to test the new high. So when that happens and the mini corrections play out, you can just take a higher low alone as long as you get a substantial push above EMA with a nice signal bar. This was okay if you took it. I mean, I see why you took it, but usually when the EMA is super far from the body, we're barely even touching it. This can be a wick trap, so I ended up skipping it, but we ended up pushing and we ended up making a new high for this channel. And then market closed within 20 minutes, so we're not even gonna review this. So Today was an okay trading session. At first, I thought we were gonna turn to a bullish imbalance to a strong bullish trend, but as you can see, we wouldn't break above this key level, which is very important to draw out and watch during your trading session. And as you can see, it just really acted as a super strong resistance where price couldn't break out of it. So we just have to respect the mini corrections, or I'm sorry, the mini trends, and that's what I was trading throughout the whole day. I ended up just getting one trade for the day, which is more than enough, quality over quantity, which was this trade over here, with a nice limit, deep limit order. Um, and the only other trade I would have said was okay to take, or the second best trade out of today would have been this one. But like I said, if we just came a little bit closer near the EMA with the body a little closer, this definitely would have been an A1 setup. But you're not always going to get what you want. You get what the market presents. And other than that, this was a great trading day. Super simple. You just have to follow the price action and let it develop, and you'll read it as it goes. Thank you guys for watching. Take care.